One of the obvious nuances that are created by candlestick signals is that they have exact definitions. For example, a couple of days ago, there was a big bullish day in the Dow. However, it was not a candlestick reversal signal. Now, logic says, well, it traded up big, but you got to remember the Japanese rice traders had 400 years to identify the different price moves. And if opening positive above the previous day's open and closing above, opening positive above the previous day's close and closing above the previous day's open, that would logically seem that that's a bullish signal. However, if it was, the Japanese rice traders would have told us what it was and what the significance of it was. The fact that it is not a candlestick reversal signal creates suspicion that it's not really anything more than a positive trading day. However, after the Dow closed up above the T line and did an indecisive day and then traded positive again, the fact that we have a Doji sandwich now adds much more credibility that there might be more upside. Add the factor that after a big, very close to a bullish engulfing signal on the transportation index and it trading positive, as long as the transportation index seems to be adding strength, that's a good sign for the rest of the indexes. Pretty much telling us that if they're confident that the transportation of products is going to be better, that the economy is going to be better. The confirmation of a bullish signal, as seen in NVIDIA, which is a big bullish big bullish harami, telling you the selling has stopped, followed by a gap up. Just look at the common sense that the Japanese rice traders utilize when they analyze a signal. If a bullish harami tells us the selling has stopped and they gap it up the next day, not only has the selling stopped, but they're starting to go in the opposite direction with great enthusiasm. Exactly where you want to be buying. The fact that NVIDIA traded positive today also kind of creating a bullish doji sandwich and telling us the T-line is not going to act as a resistance level anymore, dramatically improves the probabilities that it's heading for the next target, which is either filling the gap or going up to the major moving averages. When the market is moving positive, our recommendations, such as in KEM, that gapped up, doing our best friend signal, one of the most powerful reversal signals, and the positive trading in the market continues to add to that positive investor sentiment created by that strong signal. Our recommendation on ResMed, RMD, was based upon that same prospect. A doji gap up, best friend signal, starting your uptrend. Once again, the uptrend being helped by the fact that the overall market is now continuing positive. No matter what trading strategy you're using, if you put candlestick signals as your chart analysis, it'll dramatically improve how you analyze your trading strategy. Our recommendation on YGYI was based upon very simple analytical visual factors. We had a bullish harami, smack dab on the 50 with stochastics in the oversold area. Positive trading. What's our analysis? That at least we could be coming back up to fill the gap, and or after coming out of this big fry pan bottom and a pullback, the next wave could be a wave 3, the same magnitude as this wave right here. This is not rocket science. This is merely taking the illustrations put into graphic depiction of what investor sentiment does time after time and having the Japanese rice traders pretty much illustrate which signals and patterns produce the strongest trend reversals. That'll be it. We'll see you in the chat rooms.